So this is the pro forma for a statement of financial position. And the key categories that will be on a statement of financial position or balance sheet are assets and liabilities. Okay, so we've got assets and liabilities. And what we're going to do is we're going to go through different types of assets. So you may know this, or it may be the first time that you've looked at this. Now, the first one is what we call a non-current asset. A non-current asset is something you have in the business for more than 12 months. So you're going to use it in the business for more than 12 months. Oops. There you go. So number one, you've got to ask yourself, how long are we going to use this in the business? So a car, you're going to use for more than 12 months, hopefully. And another quality of a non-current asset is it helps you earn profits. So it helps you generate sales. Oops. Helps you generate sales. Let me give you an example of this. So some of you work for the NHS, a hospital, okay? Examples of non-current assets are going to be the buildings. Okay, so a really good example here are the buildings. In Birmingham, we've got the beautiful Queen Elizabeth. It was only built a couple of years ago. It's massive. It's going to be there for a really long time. It's cost a fortune, but the NHS need those hospital buildings in order to house the patients. They then got their equipment, haven't they? So that will be beds. Oh, I don't know how long you keep the beds for, but I would have thought they'd be more than 12 months. CT scans, the machines that they use in the NHS. That is going to be a non-current asset. You've already mentioned laptops. That would be a non-current asset. Motor vehicles. Motor vehicles could be lorries. So like my dad, he used to have a transport business. So he'd buy his lorries and then the drivers would transport. He used to sell them crates. So he would then transport the crates all around the UK and Europe. So lorries were my dad's main non-current assets. Fixtures and fittings. So chairs, tables. Can you think of anything other than that, guys? These are things you need in the business and you're going to be using them. Can't make you sit on the floor to do your work, can we? Machines. If you think of Cadbury's World, they've got massive machines that make all of the chocolates. And they have different machines for different chocolates, so like milk buttons. I love those. Double deckers, they're amazing. But you have a different machine to make them, don't you? Is everybody happy with what a non-current asset is, also referred to as a fixed asset? You've then got your current assets. Now, current assets, in definition, are items that will be used within the business for 12 months. So used in the business for less than 12 months. So they're going to be used in the business for less than 12 months. And they're going to be converted into cash. And they're going to be converted into cash. So let me give you an example of this. Your first one is inventory. Now, inventory is the international terminology. This is the American term. So the Americans will say inventory, whereas the UK guys, the British guys, we say stock. So I don't know if you are aware of this, the terminology, but you've got two types, inventory and stock. This is, so what do we mean by inventory? These are goods held for resale. So these are goods held for resale. So if we take, for example, Cadbury's World chocolate, that will be your boxes of chocolates, your bags of buttons. For the NHS, their stock is going to be medical supplies, so medicines or syringes, wipes, bandages, that type of thing. Severn Trent is going to be water, isn't it? Because that's what they sell. I think you sell a bit of electricity as well, don't you? So for, the stock is going to be different for each person. Leah, you worked for a pet shop, so the inventory at the pet shop would have been the animals and pet foods. I'm assuming you sold pet foods and like pet toys. You can sense I'm like out of my depth now, thinking, oh my gosh, what do they sell in the pet shop? But I'm assuming that's what you sold. Brilliant. So that would be the stock for that business. Now, who works for Ofqual here? Because that's a funny business. Oh, Leah. So Ofqual won't actually, my understanding is they won't have a lot of stock because Ofqual is a service industry. So for those guys who work in practice as well, Megan, Yasmin, you're working in practice, aren't you? You're not going to have any stock as such, maybe some stationery in the cupboard. What you're going to have is maybe what we call work in progress. So you're working on a job and that's the time you spent on that job that hasn't yet been billed. So that might be stock, but it's not something tangible like in a pet shop where you can count the number of fish, you can count the number of dog tins, etc. But the key concept here with stock is it's goods held for resale. So you've got water that you can sell within 12 months. You've got medicines that you can use within 12 months. The NHS is a bit of a funny one, really, because you are not a profit-making organisation. The only time you will sell something, really, is to the private sector. So if you're doing private care, then you will sell your services from an NHS point of view. Otherwise, you're just spending that money on a budgeted basis. Does anybody else work for a different company? So we've talked about practices. I know the Georges, you work in practice as well. Is there anybody else that I've missed from the type of category of company you work for? And does the concept of inventory, also known as stock, make sense? So stock is going to be different. Inventory is going to be different for every single business. If you're a butcher's, it's going to be meat. If it's a bathroom company, it's going to be your tiles, your toilets, your baths, your mirrors, that type of thing. Argos sell all sorts of things, don't they? So the stock is going to be very variable depending on the business that you are looking at. I did an audit once for a company that sold copper, and the room wasn't very big. So their stock room was not big at all. It was really tiny, and they got sheets of copper. And let's say one sheet of copper was 6 foot by 6 foot, let's say. The value of that copper was millions. It was unbelievable how valuable, just, a small sheet, 6 by 6 is not a lot. And it was like millions of quid for this metal. I've had clients who are jewelers, so they've got diamonds, gold, and, a little handful of diamonds, and you're talking thousands of pounds. But that's stock, because they'll be able to sell that arm to somebody in an engagement ring, let's say. So stock is different for all different businesses. But we would call that current, because we would hope that you would sell that inventory within 12 months. If you think about a supermarket, all those items on the shelves and in the back rooms is all stock that hopefully the shops will sell with quite a quick turnaround. We've then got trade receivables. Now, trade receivables is also referred to as debtors. And the definition of trade receivables, also known as debtors, is a customer who owes us money. So this is a customer who owes us money. And that's because we would have given a customer credit. So let's say that HTFT makes a sale to you guys. So I sell you my services and you owe me £1,000. But I say to you, look, we're going to give you 30 days to pay. So I've made a sale, but on the other hand, you now owe me money. And that is referred to as an asset, because that will be converted into cash. So I've made you a sale, you've not given me the cash immediately, but I will get that cash within 30 days. Is that all right? When I was a student, when I was training, I really struggled with this. The way I remembered it, and it just seems so silly now, but it really helped me. He owes me the money. So if you think of them Cockney rhyming, he owes me money. He owes me. Debtors. He owes me. That's how I remembered it. Lovely, Leah. We've then got cash. Now, cash can be split into two elements. You've got the bank, and then you've actually got real cash, like we would refer to it as petty cash. Not many businesses nowadays have cash on the premises, but there are some that do. Can you give me an example of a business that you know will have cash on their premises? Retail, absolutely, spot on. Pubs, brilliant, excellent. Market stores, brilliant, absolutely on the money. So you've got to visualise that, you know, you're in Tesco's, and yes, some people will pay by credit card or debit card. So some people will pay by debit card or credit card. Where's that going to go? So if you pay by card, where's that going to go? Yeah, it goes into the bank account. So you're at Tesco's or you're at Sainsbury's. Who do you shop with, guys? That's a non-accounting question. Where would you shop? I'm an Aldi girl myself. Love Aldi. Oh, Megan, you are posh, Waitrose. Lidl, Tesco, Morrison's. So you go into those shops. If you pay by card, that money will be transferred directly into that company's bank account. Whereas if you give them cash, what will happen is the following. I don't know if you've seen this in the big supermarkets like your Tesco's, your Sainsbury's. They actually put the cash into like a little tub. It's like a circular tub. They roll the money up and they put it into this tub and they put a lid on it and then it goes through a funnel. Has anyone seen that in the shops? I know all the big all the big superstores do it. So have a look by the till next time. There's like a massive little tube that goes up. It depends which shop. It's either up and over or under. But they put the money in and then it goes into the back office. And the back office will then count it and they may put it into a safe because there's so much money coming through the business. Now, your Tesco's, big businesses, they will bank daily. So they will then take that cash and put it into the bank. But smaller businesses, they won't go to the bank daily. They'll go to the bank when they feel it's appropriate. So like my mum, she has a cattery. Let me explain what a cattery is because some people don't know. It's where you own cats and you go on holiday and you don't want to leave your cat with a neighbour or family, so you will take the cat to a hotel. That is what a cattery is. It's a hotel for cats. So my mum, you know, it's not a lot of money. She'll get 50 quid here, 60 quid there. So there's no point in going to the bank to bank that 60 quid because she's got to drive there and drive back. So what she does is she will like wait a week. You know, in January, it's very quiet. So she might not have anybody in the cattery in January. So, you know, if she has one person, she might leave the cash in the tin and then go the week after. So depending on the business, you might have some cash on your premises, but that will then eventually be banked or it could be spent. So like my mum does spend the cash on allowable expenses to the business. Is everybody okay with that? Okay, so there are other assets. And the more you study, the more examples will appear. One of them is called a prepayment. And some of you might already do this. Does anybody pay for their car insurance up front for 12 months? Brilliant, Clarissa and Jess. So, you know, if you pay your car insurance up front, you have what we call a prepayment, okay? So here we've just got an example of December 2004, let's say. Let's say that you have paid your car insurance from the 1st of September 2004 to the 31st of August 2005, let's just say. September, October, November, December are in your accounting period. You have paid 12 months worth, but only 4 months relates to this period. Therefore, we have prepaid 8 months. So let's say it's 1,200 quid. So the total insurance is 1,200. We're saying that 400 goes into the accounts now, but 800 we're prepaid. So we would put 800 here, say as at the 1st of January 2005, we've got 800 quid that we've prepaid for in advance. Does that make sense? Not more detail. I'm just highlighting now to you that there are so many more examples. Okay, so what we're looking at here are the core basics. Right then, so in my head, we have done assets, non-current assets and current assets.